Randy, or is it good evening for you? Thank you very much for joining us, I think all the way from the United States. The markets have risen rather rapidly. Too much too soon. Do you think, does it merit a pause, or are you still a buyer?
Well, first, thanks for having me back on. It is still December 7th here, so I should wish you a happy 21st anniversary on your station and show.
Thank you, Randy.
The stocks have come a long way. If you look at India, it's actually the second best emerging market since the bottom of the markets in March. It's up over 50%. The only market doing better than that is South Korea. In addition, if you go into the internal technicals of the Indian market, 90% of liquid Indian stocks are above their 50-day and their 200-day. So that really is about as good as it gets. And well, I feel great about the Indian markets long term. I would be looking at some point for either a pullback or a sideways consolidation here.
Okay. Randy, good evening, and thank you very much for your wishes and for joining in. So, as we were just discussing a while back, fingers crossed, we don't want to jinx it, but India seems to have got a handle on the COVID situation a lot better than, many of the Western countries, the UK, EU, and the US included. So is there a reason to believe that we could start getting substantially higher foreign money and investors could start differentiating and giving India a premium if it's getting out of the COVID mess earlier?
I think India is going to get more foreign money, and I think it's going to get more foreign money for two reasons. One, I think it's, if not the best, one of the best secular growth stories over the next 10 years in the globe. The second is, we've talked about this before in your program, I think a lot of business is going to migrate from other emerging regions into India, in particular China. I think that's just starting. And I think that's going to help, it's going to continue to help technology and companies like Infosys and Cognizant and Wipro. And I think over time it's going to help some of the manufacturing base as well. So I do think money's going to come there over time. I'm just pointing out to your viewers that, boy, we've come an awful long way since the last day of March.
Randy, hi, pleasure to speak with you on CNBC TV 18. Just to take that discussion forward, you spoke about some of these IT names like Infosys, Wipro, etc. In this post-COVID era, in the new vaccine era that we're looking at, which are the companies or sectors that you like within the Indian markets now?
Well, it's interesting. The last 4 weeks have really been driven in the India market by the lagging sectors doing better. Utilities, financials, energy, some consumer cyclical, and some things like autos and tires. And those have been a good bounce, but long term, we still like a lot of the growth sectors. We like technology, we like healthcare, we like specialty consumer. One name we like a lot is PI Industries, which is one of the top 15 companies in its industry. It's one of the largest agrochemical companies in India. They introduced 3 new molecules in their portfolio this year. They've actually got 60 new molecules in the pipeline. And if you look at fiscal year 21, which ends this coming March, they're forecasted to grow revenues 20% and earnings 40%. Also, they're in a very large industry. The industry is about $250 billion. It's growing at about a 5% clip. So that's a secular growth name that I really like. And I think it's got several years of growth ahead of it. And that's a name I tell people to look at.
Okay. Randy, there's going to be a Credit Suisse, annual investor meet or some such thing, where they're pointing out that India's production-linked incentive scheme is an improvement over previous schemes. Previous schemes were thinly spread across the industry, usually to the bottom of the pyramid. This one is going for the stronger guy, and therefore this might succeed. Have you researched on this production-linked scheme? Some stocks like Dixon and Amber have gone through the roof because of these schemes. Are you looking for any other candidates?
I haven't looked at it in depth. They have had big moves. They've had big moves in front of this, which does, give me some pause. So I really would like to see that, shake out a little bit. In terms of getting more cyclicality, we've been looking for more kind of chicken cyclicals, a company like Asian Paints, for example, in India, as opposed to some of the really, truly cyclical companies.
Okay. But, this production-linked scheme is also being extended to pharmaceuticals and, all the marquee names have thrown their hat in the ring. Would you like any of those? I mean, a pharmaceutical company, of course, went through the roof like Lotus Labs. But the larger basket, you like any?
We do like some, and one I mentioned on your show before is, we still really like Biocon. It's one of the leaders in biopharmaceuticals around the world. It does generics for biologics. It's expanding its number of products both in India and in the U.S. And I think that's a company that's got a really great growth outlook for itself over the next several years. So that would be a name I would definitely look at.
Right, so Biocon is something that you're watching out for. Randy, let me ask you about financials. What do you like here? But yesterday we were speaking to one of the biggest banks, Axis Bank, and they did tell us that there's some worry about retail bad loans maybe for the next 2 quarters. But how do you read the financial landscape here?
They've had such a strong move recently, and inflation is still, running pretty high in India. I think it's running about 5%. I know that the repatriation rate is about 4 and change right now, and the central bank's keeping that down. We have liked HDFC in the past. I don't think we'd want to chase the banks here, though. I think we'd rather see them maybe pull back and settle a little bit, given the action they've had in the last 5 weeks, and then see if there's a consolidation and we can start to pick them up then.
Okay, the last time we chatted, Randy, Reliance was sitting at a high of around 2,200. Since then, it's come off quite a bit. In fact, in the last 3 months, it's gone, back to that 1950 levels. As a long-term investor, is this the time to be buying some of these heavyweights like Reliance, or would you be cautious?
I actually think that is a very good idea here. Again, a lot of leadership stocks have kind of gone into a funk the last month or two. And I think that's an opportunity to rotate some money out of some of these cyclicals that have been doing better and picking up the long-term secular leaders. So Reliance actually is a name we like. And we like Infosys. We like Tata Consumer Products also. A lot of these stocks have come down and they're forming a base, excuse me, and they're starting to roll up on the right side of that cup. And so I think that's a good opportunity to buy something that's not extended, but is actually, based out and is starting to firm.
Okay, that's a great point you're pointing out, and the chart is in front of us. But Randy, let me give you a blank check question before we sign off. We've been asking you this sector and that. As the markets stay at all-time highs, 3,350, where are you buying, if at all?
I would like to see, honestly, I would like to see a 5 to 10% pullback, or I'd like to see the market go sideways for a few months. I just think, 52% off that follow-through day on the last day of March is such a big move. I think they are extended. I feel great about the Indian market over the next 12 months. But if I had excess capital right now, I'd really be looking to take a step back and wait for better prices. Then I feel like I have to rush in right here at the very end of the year. A normal move for a market like this would be a 5 to 10% correction.
All right, that caution is well taken. Thank you very much, Randy, for joining us, staying up for us, and for your birthday wishes as well.
Thank you very much.
All right, we have to take a quick break on that note, and thereafter our entire research team will be with us. They're going to detail the stocks that